Good afternoon. George Kivligos for Dragons, or not Dragon Slayer anymore, sorry, HFT bonds. Wow, what about deja vu? New highs last night, kind of similar to the night before last. Remember we talked about the upthrust potential where the market breaks out of the range, makes a new high, and then comes back into the range. Well, that happened. Walked in this morning and the market was trading pretty weak. I think the 10-years were around 133.06 after trading as high as 12.5 last night. And we're just under pressure hard. And it looked like to me like we finished our ABC rally up and we're getting ready to go down into the wave, the impulsive wave to new lows. Of course, we didn't take out the lows. My plan was to put a tiny short on and be sort of before the break, and that was a mistake. Obviously, I should have waited for the break of the trend of the old lows. We're in a range still until we break out. We're still in the range, so we'll see. Markets bounced back tremendously. Bonds actually took out last night's lows. The 10-year didn't. So we'll have to see how things follow through here. We've sort of overlapped the previous highs just a few minutes ago. This is just about 10 minutes before the pit closes. We're trying to bounce back again. Equities are still kind of weak. The S&Ps are close to its daily low right now. Nasdaq's not on its low, but it doesn't look great either. Treasuries are bouncing back here. I think we can probably make a retest of the highs here, but because we overlapped the previous highs, I think it's going to be tough for us to make a higher high right now. Maybe overnight, after another little bit of a dip, I think we'd have a better shot. My short-term count, gives us a chance for another dip. We went from 9.5 down to 4.5. Figure 5 ticks, bounce back up here. Maybe we trade, let's say 9 again on the close, and then we can work our way back down towards 04 again. A little ABC corrective down, and then probably try and back up again. Tomorrow's Friday, and it's going to be tough for the market to break on a Friday. But we'll see. Tough trade, range trading again. Buy them when they look horrible and sell them when they look great. I don't think many people are having a ton of success with consistent good trading in this environment. I know I'm not. Had a long talk from the head trader in the room today about what I've been doing lately and the mistakes I've been making. I don't know, since I started the chat room, I've reverted to trading 101 mistakes. Maybe I'm pressing too hard, he said. Wait for the market to tell you what it's doing and then get along for the ride. Don't try to anticipate the next move. That's, I think, what I've been trying too much. So we'll see. Right now, I'm flat. I think if we can bust up through last night's highs and look for some kind of small reversal off of that, kind of trade again, the potential upthrust trade where we take out last night's highs, 12 plus in the 10-year, break above there and then come back below 12 plus. That might be another kind of range trade, short scalp trade at this point. And on the downside, we all know the lows, that 132.26 area. As long as we don't take that out, the market can have these bounces again, I guess. It's a difficult count. I'm sort of getting a little confused now with the wave count. I'm not sure if we're still in some kind of big protracted, A, B, C, D, E, F, G kind of sideways to higher corrective trade, or whether we're building some kind of a base for a move to higher levels. If you look at the bonds, they're making higher highs and slightly higher lows. The 10-years matching its lows are making lower lows. So we're seeing this divergence between the two markets, and I'm not sure if that's telling me, to be bullish bonds and bearish 10-years and look for curve flattening, or if it's just telling me to continue the range trade type trade right now and don't fall in love with anything. I'm going to lean on that one right now and see what happens. S&P is still flirting around its lows, but the old high from back in March was 1419.50. We haven't overlapped that yet. I think as long as we're above that level, I'm going to keep my TBF position. If the S&P trades below that 1419.50 level, I'm going to get out. And if the bonds trade over 149.20, I'm going to get out of the TBF trade too. So keep those levels in mind. I don't want to let that turn in any kind of a loser. You know, I think when we first put it on, the bonds were right around 149.20 area, so it'll probably be a scratch at that point. Or make sure you have a stop in if you're in that trade. Don't let that turn into a loser. Okay. Have a great night, guys. See you tomorrow.